Bonjour, welcome to Wahsa Distance Education Center's radio Zoom classes. This is MEL3E, grade 11 workplace math, and I am Bronwyn Slate. If you'd like to participate live today, you're welcome to call the Wahsa studio at 1-800-465-7144 or 737-4017. You can listen on the radio at 91.9 FM or on the television at Bell Express U channel 972. You are always welcome to join me live through the Zoom link, which is available for me, your teacher, and also your DEC. Our classes are scheduled Monday through Thursday, 9 to 10 in the morning, and we're in our second week of this course. A reminder of what work to submit for marking. The support questions, the ones marked with the pencil icon, are not for marking. You decide which ones to do and how many to do. They're practice problems. If you're understanding a concept, feel free to skip questions. And if you need more practice, let me know and I can send you more. The key questions, the ones marked with the key icon, are the ones to submit for grading. So please do all of them, showing all of your work, your steps, and your thinking. This way I can give you credit for all of your understanding, but also if you're struggling with something, I can understand what it is that you're struggling with more likely. There are 3 methods for submitting your work. The first method is to scan your work and send it in electronically. If you have a smartphone, you can use the iPhone Notes app, or an Android phone, you can use the Google Drive app. If you don't have a smartphone and you just want to take pictures, that's fine too. They're just going to be larger files. Then you can send it either through email to studentwork@nnec.on.ca and CC it to bronwyn.slate@nnec.on.ca, or you can send it to me through Facebook Messenger at @bslatewahsa. The second method is to drop off your work into Lookout. We have a small white mailbox next to our side entrance at our location 74 Front Street. We're the big red building next to the post office. The third method is to hand in your work to your DEC. They can then send it through the express or fax it to 807-737-1732 or toll-free fax to 1-800-463-7852. If you'd like to connect with me through social media, both my Facebook and YouTube channel are under the name @bslatewahsa. All of our classes after airing are recorded and uploaded shortly after on YouTube. So this way you can access them through either of those platforms. There's also short videos on my YouTube channel that explain common errors or confusing concepts for this course, as well as other courses. So you can access that if you're struggling with something. It's a really good resource. Math is a really visual subject, so I strongly encourage you to connect with the videos. If you can't join me live through the Zoom link, that's completely understandable, but you can then watch the YouTube replays there, where you can pause, slow things down if you need to. If you don't have access to reliable internet, that is fine. Just let me know and I can send you a copy of the recording so you can still access the videos. If you have any questions or concerns, please reach out to me. This is why I'm here. My email is bronwyn.slate@nnec.on.ca. My Facebook is @bslatewahsa. My office number is 807-737-1488 or toll free 1-800-667-3703. My office hours for this term are Monday through Friday, 9 till 4. And I'm happy to connect with you during those hours. Yep. Our lesson today is paying taxes, lesson number 4. So our learning goals are that at the end of this lesson, you can say, I will understand who pays taxes and why. I'll be able to identify the different tax forms required for filing income taxes, and that you will understand the calculations associated with paying income taxes. So you've met our learning goals because 1, I can recognize the forms to file and the paperwork needed to file income taxes. 2, I can calculate how much income tax needs to be paid based on tax brackets. And 3, I can calculate the percentage of income taxed. All right, so let's do our brain activation, our mental math to get our brains going and into the math zone. I don't like math minutes. I find them distressful for many students and not a way to actually build comfort and confidence with arithmetic facts. So instead, I focus on developing strategies that you can transfer them to various situations and you can feel confident with using numbers and doing arithmetic. So our question today is 30, take away 19, and we're using the strategy of adjusting one number. So here, 19 isn't a super friendly number. So I'm going to imagine that it's 20. So if I were to do 30, take away 20, well, that's straightforward for me. That's 10. That's a fairly familiar chunk. But I only took away 20. I didn't take away 19. So I still need to take, so that means that I took away more than I needed to, which means that I can add on that extra one, which gives me 11. So 30 take away 19 is 11. You can think about this in terms of, it can be a little bit confusing in terms of, well, do I add one? Do I take away one? Well, here I had to add one to get to 20. So that means I'm going to have to add one to my answer here in order to get to the correct answer. Okay, and that's one way of doing subtraction without having to borrow or remember any of those rules, but just thinking logically about what it is that you're doing. All right, so mine's on. What do we need to use for prior learning that we have that is useful for this lesson? Really, what I want to talk about in terms of thinking about prior knowledge is how our society thinks about math class, particularly with taxes. A lot of folks don't believe that we teach taxes in school. In our education system, this course is focused on all of our real life ways that math is used in many real life situations, which many of us have to use. But there's lots of jokes out there about how we don't need the math that we teach. So for example, I have on my screen, I have a couple of memes or tweets that are poking fun at math education. So the first one is, how do I get a job? How do I pay taxes? How do I buy a new house? And school responds with, well, actually, and gives you the quadratic formula, which doesn't feel very useful in those situations. Similarly, we have Sage Boggs, who says, I'm glad I learned about parallelograms instead of how to do taxes. It really comes in handy in this parallelogram season. Or Floyd River says, I'm glad school taught me the Pythagorean theorem instead of how to do my taxes. It comes in really handy this Pythagorean theorem season. So both of them making fun about how we learn about other things and not taxes, though we have tax season every year. So this is just a reminder that we make fun about math and education a lot, and that we don't necessarily see the value in much that we learn, but that it is all actually interconnected. And here in this class, we really are actually focusing on real life tools that hopefully you can use. So let's dive into these concepts of taxes, as everyone wants to learn about taxes, it seems. So when will you use this in real life? Well, every year, in theory, you're hopefully paying your taxes, but it's important to be informed members of your community. So that's what we're learning to do. So not only is it important to pay your taxes, but also to understand why you're paying taxes, how you're paying taxes, how it all works, opposed to just doing it because you're supposed to or doing it because everybody else does it. It's important to have the information behind it in terms of how it actually works. And that's what we're focusing on in this lesson. So first off, let's just make sure we're all on the same page. What is tax? So tax is a mandatory payment made to the government. It can be levied upon things such as income, property, and goods and services. The income generated from taxes is used to support the government and the programs and services it provides. So why do we pay these taxes? So the government collects these taxes to pay for such things as roads and highways, hospitals, education, healthcare, national defense, police, fire services, parks and playgrounds, libraries, garbage collection, and a lot of other programs and services. So there's a lot that we as a community of people need to support each other and pay for that we don't have to pay for upfront. So being able to just go into a library and not have to pay to go into a library, being able to go into a hospital or go to see the doctor and not have to pay. This is where all of our tax and money is going to collectively support each other and ourselves. The tax revenue helps distribute wealth to benefit lower income individuals and families by funding social programs, as well as the old age security pension, Canada Child Benefit, and social assistance. So again, this is the concept of that we as a community are supporting everyone. So if you have a higher income, you pay taxes on the higher portion of your income, you pay more, a higher percent, in order to redistribute that wealth to collectively support other people in your community who may not be as privileged or may not be able to work and make the same sort of income. So in this lesson, we're going to focus on filing income taxes. In further lessons, we're going to be talking about like goods and services taxes that we pay when we're buying things. But this one, we're mostly kind of focusing on income taxes. So every year, Canadians must file an income tax return. This is a document which shows the government how much income you have made throughout the year, as well as any deductions that you have. The purpose is to ensure that each worker has paid the correct amount of deductions, and it's commonly found that you have paid too much or too little throughout the year. So how do you actually complete an income tax return? And this is on page 26 of your IL book. To help complete your taxes, there are various forms that need to be completed to calculate the amount of income tax that you should pay both provincially and federally. So there's different ways that you can do this. One, you can use a tax preparation software. So this means that you're doing it online and you're using a program that has been certified by NetFile. So there's lots of different options. And there are free ones, pay what you can, or paid programs, and they're found at canada.ca/netfile. So you can go there and find different programs that are certified by NetFile and therefore the correct ones to use. Some examples are TurboTax, Wealth Tax, Cloud Tax, Each Tax, or Taxtron. I generally use TurboTax. This is the one that I've used for many years, and I find it really straightforward. They ask you questions at the beginning about your situation, and then they prompt you to answer and fill in information along the way but it leaves out information that you don't need. So I am not self-employed, so it doesn't ask me any questions about being self-employed. And I can just skip over that part. I don't even really think about it or notice what I'm skipping over because the program prompts me to the things depending on my situation, which everybody's situation is different. The second method is to use a tax preparation service. So you take your papers, all your documents to an office or a location and give them the paperwork, and then you have another person fills it out for you. They are accountants, generally, maybe retired accountants, people who can make sure that they're doing it all properly and everything gets completed for you. So I just did a quick Google search to see what's around to look out, and there are a few different accountants, tax services that are available. I don't know anything about them, but you can call them up and make an appointment, or some of the times they have clinics around the time that taxes are due. Then there's also larger companies like Liberty Tax or H&R Block, which provide the service more nationally. So you might be able to go to different places and do this. And they're bigger companies that do this. And again, often they have clinics around in March and April, which is when tax season is. Taxes are due by April 30th. And so you can just go in and take your paperwork, and you don't need to make an appointment, but you just sort of walk in. It's like a walk-in clinic kind of thing. And then they file all your paperwork and support you if you get audited or something like that. So that can be a great option. You pay for that service if you're going to use it. And then the third option is to complete a paper return. So this means that you are filling out all the forms and then you mail it to your tax center. So wherever makes sense, that's closest to you. If you filed on paper last year, then the Canada Revenue Agency, the CRA, will automatically send you a new package by the end of February, early March. You could also view and download it and print it from website canada.ca/taxes-general-package, or you can order a package online and then they'll mail it to you, or you can call the CRA and they will send one to you as well. You just need to give them your social insurance number, so be prepared for that. It can take up to 10 business days for publications and forms to arrive by mail. So if you are going to do a paper copy, you just need to keep that in mind in terms of the timeline of how long it takes to mail things. So taxes are due by April 30th. If you owe them taxes, then you start paying interest if you haven't paid them by April 30th. And so you need to take that into account if you're going to do it if it's just going to take a little while to get those packages in the mail. Okay, so what is this actual tax paperwork that we're talking about? So first, when you get a new job, when you start a job, you're going to complete a Form TD1 anytime that you start a new job. And this tells your employer how much tax they should be deducting from your pay so that you've paid enough tax over the course of the year. And there's various things along this that, depending on your situation, you may add that information in to this form. In my experience, most of the time I've left most of this blank in my life, but that could be totally different for other folks. And then you hand this into your employer, and then they give it to their HR department and figure out how much tax they're going to deduct on your from your paycheck, which we've talked about previously in terms of those standard deductions. That's how they figure that out. Then when you are filling out your taxes, you're going to get this form, this T1 general form with the current year. I just found one online to sort of see. And then from there, you then fill in the information. So you put in your name, your address, your social insurance number, your date of birth, the English that you wanted to talk in, your correspondence language, your marital status, and then if you have a partner, what their information is, so that they can match these together, because you submit your income tax together, and that means that there's certain benefits to that. And then you go through and you fill out all of these boxes. So you fill out your income and all of the things that your CPP and your EI and all of these things. You go through each of these layers, and they tell you about a form if you need it to fill out, or where you might find that information. So employment income is from box 14 of all your T4 slips. So you find all your T4 slips, which we're going to talk about, add them together, and then you write that on line 101. Before the line is your dollars. After the line in this little small space is your cents. And then at the bottom, and then it tells you to add up the lines, which lines you add up to have your total income. So you're really just filling in the blanks based on other forms and other receipts that you have. And it then has another page, and it says to attach your Schedule 1 federal form and your Form 428, your provincial or territorial tax form. But so there's other forms that you may need to fill out, but then you continue to fill in the boxes, and tells you your taxable income. If you have any refund or balance owing, again, you fill the boxes. I've never done the paper copy. I've only done it electronically or through the service, paying an accountant to do it. But I think that you basically just follow the instructions, read each line, see if it applies to you, and then fill it out. So the T1 General is your actual tax return. This is a form that you have to have if you are doing your paper copy. But then you also need to have, as it said before, you need to have your Schedule 1 and your Form 428 to add those to in addition, you need to attach those other forms as well. So let's look at what those are. So this is the Schedule 1. This is the federal tax form. So again, you fill in, you follow the instructions. So if here it says based on personal amount, everybody claims $11,327. So you write that in. Then your age amount, if you're born in 1950 or earlier, then you add a maximum of $7,033. And it says use the federal worksheet. So you look at that and you figure out how much, depending on when you were born, how much you add in. And then you continue to go through and add each of these things. If it says attach, then you attach another form. You need to find it. It's going to be in your package that you receive if you're doing the paper copy. And then you just keep going, and then you add things and subtract things depending on what they tell you to do. And you continue. that. So you just follow the steps and fill in the blanks and add and subtract. And sometimes you need to do percentages depending on what we're going to look at. This is the tax brackets. We're going to look at that more in a minute. So the Schedule 1 is one of the forms you need to complete. This is the federal tax element of your taxes. So then we have the Ontario tax form, which is ON 428. I assume for other provinces and territories, they have instead of ON, they have a different leading letters there. And again, you're filling in the blanks, and they're telling you how to calculate it and what you need to put in where and what you need to add and subtract. So really you're just following each line and filling in the blanks. And this one has multiple pages. So you continue that. And then again, there's your taxable income, filling in these are tax brackets, which we're going to talk about in a minute. So you need to have both the federal Schedule 1 and the ON 428 for provincial taxes. Again, they all come together in your T1 general form package. Okay, so those are the forms some of the forms you need to fill out, the main ones. But then where do you get the information? So you need to have your T4, and your T4 slips are completed and given to all employees by your employer. You can have more than one. If you're working more than one job at one time, you're going to have more than one. If you finish one job, you quit, you're laid off, whatever, then you will have a T4 for that job. And then you'll also have a T4 if you get a new job. So you very likely have more than one T4 unless you are starting January 2021, for example, and finishing and still in December, at the end of December 2021 are in the same job, then you would only have one T4. It's called the Statement of Remuneration Paid, and it keeps official record of the amount of income that you earned in that calendar year, the amount of income tax, CPP, and EI that you paid in that calendar year, and any other deductions that you made through payroll that affect income tax, such as charity donations or other pension plans. All of that is on your T4 slip. So this is what a T4 slip looks like. So it has your company, your employer's name up in the top left-hand corner. They have your name and your address here, your social insurance number. It says that it's a T4 up in the top right-hand corner. It says that the year that you are, this is talking about. Then these are the lines that the boxes, when it says on your general form, when it says that you add up all of the line 14, then you look here, this is where it says line 14. So here from this place, this person made $65,000 in income from that place. So that's what it means when you're lining up this little box here tells you that this is the number you need to put in wherever it talks about box 14. Box 22 is the income tax deducted. So here it says this is line 837, I think. Sorry that it's hard to see on here, but it's much clearer on your actual own T4 slip. This is just because this is an image that I found online instead of showing my actual personal T4s. So it tells you which line you're talking about, and it gives you a reference number that on your tax form tells you to refer to that number. So it's all here in terms of your CPP, your union dues, if you pay them through your work, your EI, and then down here at the bottom, there may be other things that are added in that aren't standard. So these are the ones that are standard for all folks. Most people have things that fall into these. If there's nothing there, then you just leave it blank. You don't need to worry about it. But then down at the bottom, there might be more things that are different for you compared to other employees or other companies. So then you can use that information from there. Okay, so let's look at a T4 and let's analyze it. So Clemens T4 from 2008. So where did he work? So we look and we see up in the corner, the employee's name is Techno Designs. So Techno Designs is where Clement worked in 2008. How much did he earn? So his employment income is line 14. So he earned $28,000 from that employee. How much was deducted for income tax? So that's line 22 is income tax is $3,700 for CPP. So employees CPP contributions is this line 16. So that's $1,212.75. EI, employees EI premiums, so $484.40. And charitable donations, so that's over here, charitable donations, line 46 is $104. And our RPP contributions, so we look through here and we see, oh, this is RPP, it's hard to see, but it is. There's nothing there, so that's just zero. So we don't have to fill any, you just say there's no contributions. And that's how we interpret the T4. Okay, so then we also have T5s. So T5 slips are completed and issued by banks and other financial institutions. They are statement of investment income. So it keeps an official record of the amount of interest earned by invested or saved money. So if you make investments, you earn interest on them. That's the point of an investment. Then that interest is counted as income. So, and that makes it taxable. Again, you can have more than one T5 slip, depending on if you have more savings accounts or more investments, multiple investments. So here is a T5 slip. So again, your name and where the investment is from, the account it's from, and then the year. It says T5 here on the top. And then depending again on what it is that you're doing, what kind of investment it was or savings it was, it tells you different amounts in different boxes depending on what you need to know. So let's look at an example. So we have Jane's T5 slip from 2017. And the question is, how much interest did she earn? So we look and it says here, interest from Canadian sources, 2,400. So that is how much interest she earned, $2,400 for this from high flying investments, which is what it's called here. So then if Jane's T4 states that her employment income was $28,721.60, how much income in total does she need to claim? And this again, depending on how you're doing your taxes, they will walk you through how to fill this in. If you're doing a paper copy, it'll walk you through in terms of what you need to do, but you need to add these two together. So the income from employment is $28,721.60 plus your investment income, your interest is $2,400. So that means that your total income is going to be together. That's 28,000 plus 2,000 is 30,000. 700 plus 400 is 1,100. So that's going to be $31,121.60 is how much income Jane needs to claim that she made over the course of that year. And then finally, we have receipts. So many people also submit other records such as receipts from daycare or organized sports or charity activities, things that you are putting money into in your community. If you're doing that, you need to be issued with a tax receipt. You'll often hear people saying that they can give you a tax receipt. That just tells you that you contributed to a community organization or something, a charitable organization or your daycare or something like that, so that that is confirmed. The receipts need to have your official logo on them, like the organization's official logo, charity's official logo, and then also the official name of the charity or the company and the scan of their signature, if not done in, if not a real live signature, just to verify that it is true. So here is an example of one. So you can see that it's Connects Kids Fund is the charity. It's signed by the vice president over here. This is who it's to, Jack Runner, and its amount of $5. So all that information is on your receipt. Okay, so you should be able to do support questions on page 31 to 32, questions 1 through 4 now. Great, so now we need to figure out how to actually calculate income tax. And this is something that's a little bit confusing and complicated, but really important to understand how it actually works so that you understand how taxes actually are calculated. So in Canada, we use what are called tax brackets, and you may or may have not heard of this. So it's a progressive graduated income tax system where your earnings are taxed at higher rates, so in a higher tax bracket, as your income increases. So your tax brackets are determine the rate of tax paid for each additional dollar of income within the defined bracket or threshold. Those with lesser income pay a lesser percentage of taxes on the income earned in lower tax brackets, while those earning higher income pay a higher percentage of taxes on the income earned in higher tax brackets. So again, this can be a little bit confusing. So we're going to look at what I actually mean. So first, just in your booklet, depending on when you got your booklet this year, the tax rates might be old. I didn't get a chance to update it earlier in the year. I have updated it now. So maybe if you received your package recently, they may be updated to 2022. Otherwise, they may be old. Either way, you can use whatever's in your package. Just if you can note saying, I'm using tax rates from this year, because that's what's in my IL book, that's totally fine. Everyone can use the 2022 ones if they want, but if you just want to use what's in your booklet, again, totally fine. I will not mark it wrong. It'll be helpful if I know, but I will try to pay attention to what you're using. The more information you can give me, the better, so that I know what it is that you're using. So I'm going to, before I read this slide about what this is, I'm going to jump us to another file that helps me understand. Because I find that thinking about it instead of as brackets, but as pockets, tax pockets, helps you understand how this actually works. Because everybody has the same access to the same size pockets. So if everybody first puts their income in the pocket from $0 to $50,197. So if your income is less than $50,197, all of your income is going to go in that pocket. But if your income is more than that, it spills out of that pocket because that pocket can only hold $50,197, and it spills into the next pocket. And that continues. So then the next pocket, the cap of that pocket is $100,392. And if you have more than that, then the extra money spills out of that pocket. But the first pocket still hold on to the money that they had. And that continues. And so each of these pockets have a different tax rate depending on the money that's in that pocket. So let's do this with an example to see if we can make this make sense. I have little images of money here. They're not all real denominations. We used to have $1,000 bills. We don't have them anymore. We don't have a $10,000 bill, but just for the sake of simplicity, instead of having a lot of $100 bills, I just use these other bills to help us visualize what's going on. So Allie makes $29,163 a year. How much federal income tax does she have to pay? So we're doing federal, we're going to do this twice. We're going to do this for federal income tax and then provincial tax. But right now we need to share all of her money. So I've broken up her $29,163 a year. I have that all in bills and coins, and now I'm going to fill up my pockets. So if we think about for Allie, we're going to put the 10,000 in, 20,000 in. And if we keep thinking about it, well, all of Allie's income is going to fit in this pocket. It doesn't actually physically fit in the pocket because I'd have to make my pockets huge and make my money really small. So bear with me that it doesn't actually physically fit in the little pocket. We're just using our imaginations to a certain degree. But you can see that this all, because my limit on my pocket is $50,197, all of my money fits into that, is under that amount, so would fit technically into this pocket. So what that means, because all of my money is in that pocket, that pocket can go up to $50,197. I'm going to pay 15, or Allie's going to pay 15% of this amount in taxes. So how we calculate that is we then just take Allie's income, so $29,163 times 15%. So 15%, which is equal to $29,163 times 0.15, which is equal to and we're going to use our Desmos calculator. $29,163 times 0.15. So that equals $4,374.45. 43.74.45. That's how much Allie has to pay for federal income tax, because all of her money fits in this first pocket. We only have this one tax rate. Okay, hopefully that makes sense. So now we're going to move on to another example. I'm just going to change my thickness of my line. Okay. So now we have another example, still talking about federal tax, still the same pockets, but Joe makes $205,486 a year. So now their money is going to fit into more pockets. So we are going to have to fill up the pockets. So first, our first pocket. So just imagine that it's actually in the pocket. It doesn't really matter. It's all about imagination. Okay, so 50,197. So we have $86. That's not going to be, we're going to need more than that. So I'm going to have to break up. I'm going to cash in one of my hundreds into the bank to just break it up and get into different denominations. So I'm going to get 50, 20, that's 70. That's 90. And then I'm going to get 5 toonies. So I just changed in 100 for different denominations to make my life easier. Okay, so I have 50,100, and then I need to put in $97. So 50 plus 20 plus 20 is 90 plus 5 plus 2 is 7. So that pocket has $50,197 in it. Nothing else can fit in that pocket. That pocket is maxed out. It is at its limit. So that means we need to go into the next pocket. So the next pocket, we can only go up to out of our total income can go $100,392. So this pocket can only hold $50,195, because if I put in more than that, it will be more. Our total income here will be more than $100,392. So this pocket can only hold $95, because if you add $50,197 together, we get $100,000 $50,392. I hope that makes sense. I know this is tricky. So far I've got 50,100 and I need 95. Again, I don't have the correct denominations for 95. So I'm going to put in 100 back into my bank and get out better denominations. So I'm going to get 50, 20, and 10 to break up that 50 or that 100. So then I need, so for 95, I'm going to put in 50, 2 20s, and then I have a 5. Great. So now I have filled up this pocket. This pocket is all full, and this pocket is taxed at, so just this amount that's in this pocket is taxed at a rate of 20.5%. But I still have money. So I need to keep filling up my pockets. My first tax bracket is full. My second tax bracket is full. I need to keep filling up my pockets. So my next bracket goes up to, means that my total income, all the income up to 155,625. So that means I have a total. So this pocket can hold 55,233. It's a little bit of a bigger pocket. So 55,000. Sorry. $55,233. I was not thinking when I did my denominations, because now I'm going to have to break up my 50,000, which is going to be really unpleasant. So I'm going to make up another bill. So I'm going to imagine that I am changing in my I'm going to imagine that I'm changing in my 50,000, and I'm going to put that in, and instead I'm going to get back out so I'm going to change this 50,000. I'm going to say that it is 49,000. Sorry, just because of my manipulatives. 800. So imagine that that was a real denomination, and that means that, sorry, and this program doesn't love me. Okay, so I took this 50,000, I put it back in the bank. And that means that I'm getting this imaginary money that is 49,800, and then $200 bills. So that gets me back 50,000, which is what I need. So then for this pocket, I need 55,000, which I have in here, 233. So then I'm going to put in these 200s, and then 33, so 20, 10, and a toonie, and a loonie. Great. So now that pocket's full. And so that pocket gets taxed at a rate of should be here. I had a tax rate written there at some point. but now it's disappeared. So I have to look up what that tax rate is. This lesson just doesn't like me. Sorry, I don't know why it won't just move for me. So we get taxed for that bracket at a rate of 26%. So this bracket is, we tax at 28%. And then now we have all of this money that's left over. It needs to go to our next pocket. And so our next pocket is up to 66. This pocket can hold up to $66,083 because it means that our whole total income is up to $221,708. So the rest of our money fits into this pocket. So the rest of our money is going to be taxed at a rate of 29%. So then how we actually calculate this, because, okay, great, we're in pockets, but what does this actually mean? So it means to find out our tax rate, how we're actually taxing is this first 50,197, we times it by 15%. And then we add it to this second amount, is 50,195 times 20.5%. And then the next 55,233 we times by 26%. And then this last amount, and we don't have this isn't a full pocket. We only have $49,861. We times that at a rate of 29%. And we add them all together. And that's how tax brackets work when you have a higher income, is that you fill up each of the pockets, and each of those pockets are done at a different tax rate. Okay. And then if we were to have an income even higher than that, if we had even more money, that would be the rest of our money, that would be taxed at a rate of 33%. If we had an income that was higher than $708, then the rest of that tax money that is too big for all of these smaller pockets falls in this bigger pocket, and it all gets taxed at a rate of 33%. Okay. So that's what this is, sort of how it explains if you were to look it up. So it says that this is the same thing with what I've just done. So the first pocket is for all the money that falls in the first, all the money that is up to $50,197. We get taxed 15% on every single person in Canada gets taxed that amount. Then the next portion of your taxable income that falls between $50,197 and up to $100,392 gets taxed. That part gets taxed 20.5%. And then that's added to your income that falls between $100,392 up to $155,625. That part that falls in that pocket gets taxed on 26%. And then the portion, if you have more income, if you have income that's over 155,625, but less than 221,708, the portion that falls into that pocket gets paid 29%. And then if you have any income that is over 221,708, that part, well, in that big pocket gets taxed 33%. I know that it is a little bit confusing. If you have any questions, feel free to reach out and we can talk about it, because it's a bit weird. Okay, so then from there, we also have our provincial rates and territorial rates, and they're all different depending on where you live. So we're just focusing on Ontario because we are in Ontario. So the Ontario rates are the same idea, but the size of the pockets are slightly different and the tax rates are slightly different. So the same in terms of if we were to look at pockets, the same way we could do the same thing for Allie. So the same idea that we have all these pockets, right? The pockets are different sizes. So from $0 to 46,226 is how much can fit in this first pocket. All of Allie's money fits in that first pocket. Obviously, it doesn't literally fit in that pocket, but figuratively, it's all less than that amount, right? So it all fits into that pocket. So for Allie, when calculating her tax rate, so you do $29,163 times, and the tax rate for provincially for Ontario for that first amount is 5.05%. So you would do 5.05%, which is equal to $29,163 times 0.0505, which is equal to, sorry, using your calculator, $1,472.73. That's how much Ontario provincial tax that Allie must pay in a year. The same way that we can then go to Joe and say that they make, again, remember they make $205,486 a year. So they have all this money, and then we need to divide it up into the pockets. The pockets are different sizes. So the first pocket is from $0 to 46,226, and that is at a rate of 5.05%. The next amount of money that falls into the next pocket goes up to the count of their income that is $92,454. So this pocket fits only $46,228, and that gets taxed at a rate of 9.15%. The next chunk of money, the next pocket can only hold $57,546, and that's taxed at a rate of 11.16%. And the next chunk of money that is, there's $70,000 the next pocket can hold, and that's 12.16%. And then if you had any more that were going to the last pocket, that would be taxed at 13.16%. I'm not going to divide up the pockets, the money into all the pockets, because I hope that you get that now. If you have more questions, feel free to ask. Totally okay to ask. But that's the same idea, is that the money goes in the pockets get full, and then the money goes in the next pocket. So the same idea here, it's just listed out in the same way in terms of all the different income that falls into those pockets and how much the tax rate is. So then the last piece for this lesson is what percentage of your income is taxed. So if you are only in the first tax bracket, your IL book shows you how to do this, and it does it with an example that is only in your first tax bracket. And so it says that, so Allie makes $29,163 a year. So what percentage of her annual income is taxes deducted? So here are our list of our pockets. And so she only falls into the first brackets, right? So how your IL book does it says, okay, well, that's going to be 15% on her first part plus 15%. Sorry, not 15%. My brain is not working. Plus 5.05%, which is equal to 20.05%. And so that's how your textbook shows you, or your IL book shows you how to figure out that Ali pays 20.05% of her income on taxes. But that is true. But if you're paying above your tax, if you have more than just one tax bracket, does that make sense anymore? So Joe, you know, makes money that means that they fall into all the way up to the 4th tax bracket for both of these, because they make $205,000, $486. So then if we add up all of these percentages, so 15% plus 20.5% plus 26% plus 29%. So that's federal tax plus 5.05% plus 19.15% plus 11.16% plus, I forgot to change these. This is supposed to be 12.16 and 13.16. So plus 12.16%. So if we add all of those up, just like we did in the other one, so we have 15%. Oh, sorry, 15. You can just add them up because we're talking about percentages. 15 plus 20.5 plus 26 plus 29 plus 5.05 plus 9.15 plus 11.16 plus 12.16 is equal to 128.02. And I maybe if I remember those wrong, but whatever, we'll go with it. So that's saying that Joe is paying 100% plus 28.02% of their income in taxes. So more than their actual amount. That doesn't make any sense. We can't do that. That's not how it works. So what you need to do is you need to find how much your tax is deducted. And so you do your tax paid divided by your gross income. And that's how you find your percent deducted. So you can't just add up your percentages, and this way will work whether or not, whatever bracket they fall into, even if they fall into the first bracket. So it makes more sense to figure out the tax that's paid, divide it by your gross income, and that will tell you what the percent deducted is. And I will update that in our IL books for future classes, but it's just really important to actually, this way makes more sense in more situations opposed to the way that the IL book shows you, which only makes sense in one situation. Okay, so now you can do the support question 5 on page 34. Again, this is complicated, it's confusing, many folks don't understand. So if you are struggling with it and you want to talk about it, let me know and feel free to ask questions. All right, so let's consolidate our learning today. So for this lesson, for paying taxes, we talked about the tax paperwork. So the TD1, Schedule 1 and ON 428, the T4, your income, and your T5 interest, and all the other receipts. We talked about how all of those work together. We talked about calculating income tax. So using the concept of pockets and how there are both federal and provincial rates, and those pockets are slightly different depending on those, if you're talking federally or provincially. And then we also just talked about percentage of income taxed, which is your tax paid divided by your total gross income. So hopefully at this point, you can recognize the forms to file and the paperwork needed to file your income taxes. You can calculate how much income tax needs to be paid based on tax brackets. And you can calculate the percentage of income taxed, what your tax income rate is. All right, so lesson 4, we're going to continue in our next session to talk about the hidden taxes as well. So that is in our next video. If you have any questions, please contact me. This is confusing stuff. So if you want to talk it through, please reach out to me. This is why I'm here. My number is 807-737-1488 or toll free 1-800-667-3703. My email address is bronwyn.slate@nnec.on.ca, or my Facebook is bslatewasa. This will be uploaded to YouTube. And so you can go over it and slow things down, pause things, work it out, and go from there. So I strongly encourage you to do that, and also to reach out to me if you'd like to understand more. Thanks so much for joining me today. Miigwech.